and welcome to today's video, which is being recorded some 2 hours before the opening bell. It's called Getting Scary, so let's dive together into where I see pockets of weakness developing, what it means for our broader trades, and how our clients benefiting from it. Thank you for liking this video and subscribing to the channel. Your likes mean much, and let me know whether you wish me to share more examples of trade setups the way I did yesterday in the comments. Let's start with yields, where I called for them to gradually keep drifting higher as pertains the tariff threats and what had been unfolding in the markets. However, yesterday's data had arrived, and both factory orders and JOLTS job openings had been below expectations, bringing rate cut hopes closer, dialing back the Trump-Powell collision course, let's call it like this, and that means that equities got quite some respite, as we will see further on. So yields are presenting less of a competition for equities through the equity risk premium concept that I had been sharing for months already. What does the crypto universe tell you right now? Is it getting ready to rise when Bitcoin Strategic Reserve has been just proposed to be evaluated, studied? Well, there is quite some pain ahead in my view, and this chart is vulnerable to a pullback. I'm not allowed to false sense of security by Bitcoin holding way above 93,000. MicroStrategy, Coin, Mara, Riot, whatever these names had been underperforming for a while. You saw the great Ethereum hit, and now, as they say, every dead cat is bouncing back. We are seeing it retrace part of the steep over the weekend decline into Monday. But I'm not that confident that the worst is over and cryptos are going to high heavens. Thank you for the great reception of this trade examination, what I called for clients, the roadmap that I had prepared for the gap close. You might be interested in knowing what I had been sharing with them as the game plan for Tuesday. It had been another take on the Monday's opening gap, which was precisely what we had seen, not just once, but twice. And when it was rejected for the first time yesterday, I saw quite a few signs preventing me from going short, because I expected another run higher to that resistance, and it again happened. Closing bell and then earnings proved to be the catalyst. What have I been calling publicly for AMD? To decline, to disappoint. I did not trust this stock, and it's a long-term thing. How can you beat Nvidia with a product that you are benefiting from only thanks to their supply bottlenecks and long waiting times? That's not the winning business model, is it? So, what do I expect for today? Make sure if you are a client that you revisit the upcoming article whenever you are viewing this video, because there it's being precisely shared, and if you are not, let's consider joining the premium services to benefit right away from what I'm doing, because both the swing clients had been capturing double-digit profits in S&P 500 futures, and the intraday ones triple digits in Nasdaq futures. So get ready and feast upon what I'm giving you all. Gold silver miners, I had been calling for upswing, and this as a little preview, only these charts I'm presenting you today, because these calls had panned out great for clients in real assets as well. I called for both metals to trend higher and not to be afraid of Monday's washout. For it, I called it to be relatively fast or reversed already on Sunday, expecting what had been happening and unfolding actually Monday. Crude oil, I called for this rip to be a selling opportunity, which is exactly what had happened, and the Canada temporary deal had been the catalyst. What I see for today, you are treated to a little preview as to where I see the closing price for West Texas, above 72 to 72.50, but the bias is of course on the short side, so I would not be stunned by a close below 72 happening today. Remember about ADP employment change coming. This will be as well what will move S&P 500 considerably. Please review the weekend video where I've been presenting as well the weekly breadth chart and how it's making a series of lower highs. Did we get enough of an improvement yesterday? What does this sectoral overview tell you? Are you confident that industrials are priced right where they should be? I don't think so. Tech had a great day yesterday, as called, joined by communications and discretionaries. Will that last? I have an opinion to share with clients, so make sure to select what's right for you, based on what and how you trade. You know my professional journey. Thanks again for liking this video and subscribing to the channel. Obligatory disclaimer, and let's talk again soon.